Ladies and gentlemen, welcome back to the channel. We have a brand new stock that has never been talked about on this channel yet that I've actually owned for a while that went up about 70% today. Okay. Now, I think the reason it went up, I couldn't find any company specific news, is the attention around heavily shorted stocks that they are starting to get following the beyond short squeeze that is happening right now. Now, this is a company that I bought like a couple of weeks ago that I wanted to make a video on this stock, but there's one problem with this company, and we'll get into that here in just a moment. But besides this one problem, I actually like the company a lot. Look at this. Let me just show you this one thing before you click off this video. This company is a real estate company that helps you with your real estate, actually buying a home, mortgage, and title services, where they will actually pay you for doing business with them. On average, if you were in Florida looking to purchase a $420,000 home, if you use them for real estate, mortgage, and title services, you would get $7,875 in cash back. You're basically disrupting the entire real estate market. Now, my thought has been for 2026, the real estate market is going to pick up. Now, if it does, that's going to be great. Okay. If it doesn't, well, that sucks. Okay. But I think with rates coming down, real estate's going to start to move a lot more, and this could all of a sudden become a hot sector again. So this is just one reason why I actually like this stock for a really, let's be honest, a really speculative, longer term position. And it started to get a little bit of attention today. So we're going to give you a deep dive on this company, some of the numbers that they are putting up, the one big problem with the company, and where this stock could go. Now, I'm going to say this at the start of this video. This is a company with like a $60 million market cap. It is a micro cap company by definition. Now, you might be surprised to hear the company's actually bringing in revenue. Okay? They're actually expected to do anywhere from 10 to 16 million in revenue next year. So the valuation is actually not that crazy for an AI real estate company heading into what could be or should be a pretty good real estate market next year, or a recovering real estate market. But I'm not a financial advisor. I'm not a financial planner. Okay. This is not a stock you put money in that you cannot afford to lose. If you put money in this company, assume you're going to lose it all. And if it 10, 20, 30x's, awesome. You made money. Worst case scenario, be prepared to lose all of your money in a stock like this. Just like Beyond. If you're investing in Beyond or any of these other heavily shorted stocks that may have done well today, you need to be prepared to lose a significant amount of money. I have just liked this stock for a while now, and I've had a position in this stock for a while now, because I like the prospects of this one. Okay. So with that said, ladies and gentlemen, the stock that, again, we are talking about is ticker symbol AIRE, AIRE. Okay. It's Realpha Tech. Okay. Hit the like button, subscribe to the channel. Let me know your thoughts on this company once we get to the end and get through all of the information you need to know. If you want to take it a step further, come invest in these kind of opportunities with us. Find these hidden gems, if you will, before Wall Street does. Check that link out down below in the description of today's episode. But with that said, let's get started. A little bit of an overview on the company. But basically, if you go to the website, it looks like this, okay? It says the end-to-end home buying platform that pays you back. Save an average of $8,000 at closing when you combine real estate, mortgage, and title services with Realpha. Okay, so this is their website. Basically, they have their AI bot here where you can chat and explore homes with, called Claire, okay? And you actually get a substantial amount of money back, okay? That was one of my favorite things about being a real estate agent. When I bought my home, I got 70% of my commission back, okay? Now, I started doing YouTube videos and chose this destination for my career and kind of put real estate on the back burner, although I still own some rental properties and I'm still actively involved in that. This, to me, seems like a win-win for pretty much everyone involved. Now, I will say I'm not sure how much of like patents they have on this technology, like what would stop major banks from doing this. I don't know. Maybe it's one of those situations where maybe banks don't want to get involved with something like this because then you're disrupting the real estate market. You're disrupting the, like realtor market. Okay. So maybe it's not all positive for like a big bank if they wanted to do this, but for someone like Realpha, there could be a considerable market here. Now, unfortunately, I live in Michigan. I can only do mortgage services with the company. They're not yet qualified in all 50 states to do all 3 of these services. Now, if you're looking to buy a home and you're in Florida, you're in Texas, you're in some of these states that actually have this service, isn't it a no-brainer? Right? And this is the first thing that attracted me to this company. When you have a deal that works for everyone, Realpha gets your business. Okay, they're making money as you buy your home, do title services and real estate services with them. But you also get a check back. Okay, that's a win-win for everyone involved. That's a business that I could see doing well. And that's why I initially bought this position in Realpha. I'll share with you the date that I bought my position, how much I own. I'll tell you right now, I own 6,000 shares of the company that I actually bought a couple of weeks ago. Now, what states does AIRE stock operate is what I asked Google. Okay, in Utah, mortgage operations expanded into the state in August of 2025. Nevada, the company grew its mortgage footprint into Nevada in October of 2025. In Georgia, Realpha launched real estate brokerage services in Georgia, including major markets like Atlanta and Savannah in August 2025. In Florida, the company operates its home buying platform and services. Realpha also lists Texas as one of its core operating states. And in California, Realpha expanded its mortgage operations into California and other states through its acquisition of GTG Financial in February of 2025. So let's actually go back to this and let's see Texas. Let's see what comes up. Okay, so you can do real estate and mortgage, but you can't do title services yet. So you'd still get $5,250 cash back on average on a $420,000 home. Okay, so again, the service is not available everywhere. It's still in the process of being rolled out, but you could kind of see how this could catch on quickly. I was trying to find news on the company, and all I kept coming across, at least on X, were people just talking about the stock, talking about the trading opportunity, how short the stock is. This post here got 9,000 views. It says AIRE, heavily shorted name. And honestly, it's not that shorted, okay, from what I can tell. There was about 563,000 shares that were sold short today. It's got 14.15% short interest of free float, so it's not like it has no short interest, but it doesn't seem crazy high. What's Beyond's always been a heavily shorted company though. Like that's really not anything new for Beyond's literally been heavily shorted forever. Short interest on Beyond is 76%. Okay, so like again, nothing new, and Realpha doesn't really hold a candle to that. Okay, but again, there's things that I really like about Realpha. Okay, number one, okay, if you take a look at holders, there is a ton of insiders that own stock in this company. This guy, Geary, owns 30.57% of shares. This guy owns 3.26%. This guy owns 2.43%. This guy owns a half of 1%, half of 1%. Citadel owns 0.11%. Geode Capital Management owns 0.11%. UBS Asset Management owns 0.2%. Vanguard owns 0.4%. You get the idea, okay? Just in the top 3 insider positions, you have, let's add this up, plus 2.43. Just in the top 3 insider positions here, that's 36.26% ownership in the company. Okay, so insiders have a heavy interest alongside anyone else that's potentially buying the stock. And you can see even on something like Robinhood, right? It says 3 insiders bought a total of 796,000 shares of AIRE in the last 3 months. So you can see 503,000 shares here bought in May and 796,000 shares bought here in August. So there's been quite a bit of buying. And you could see these are automatic buy transactions. So just automatic. Okay. Geary, the director, 10% owner. The CFO, here, CEO, CFO some more, CEO, and Geary again. So there's a lot of insider buying activity, which is a green flag, okay, to say the least. Okay, now their last earnings, it says here, Realpha shows explosive 1,909% revenue growth, but widening losses as cash reserves drop by 84% amid aggressive expansion. It says here the company's cash position has deteriorated significantly, falling from $3.7 million to just $587,000, an 84% decline year over year. This severe cash burn rate raises serious questions about operational sustainability, especially considering the widening net loss of $4.1 million, up from $1.5 million in Q2 2024. It says, while gross profit increased to $621,000, the gross margin contracted substantially from 71% to 50%, indicating higher costs associated with scaling their mortgage brokerage operations. The adjusted EBITDA loss more than tripled to $3.5 million, suggesting that operational efficiency is actually deteriorating despite the revenue growth. It says here they had a full repayment of their $4.47 million secured promissory note to Streeterville Capital, including a 9% prepayment penalty. So they repaid debt, which it says here that explains much of the cash position reduction. While this improves the balance sheet structure by reducing debt, it severely constrains available working capital given their current burn rate. This is the thing that I don't like. We'll get back to it in just a moment. Let's actually finish this paragraph here. It says, Realpha's strategic pivot appears focused on scaling AI-powered mortgage processing capabilities, with their loan officer assistant reportedly reducing document preparation time by 60% and overall loan processing time by 20%. However, the company's geographic expansion into Texas and Utah, while experiencing widening losses, raises concerns about their growth at all cost approach during a period of financial constraint. Again, it says the leadership reorganization, including appointing Mike Lagozo as CEO and bringing on experienced executives like Crystal Ripe as CMO, suggests an attempt to stabilize operations. However, the financial fundamentals indicate a company that needs to address its unsustainable cash burn rate immediately, despite the impressive revenue growth figures. So this company is actually bringing in some money. Okay, $1.3 million in the last quarter. Now, estimates for this year are around what? I just seen it just a few minutes ago. Might have to read this. 3.2 million is the projection for 2025. Okay, things really started to ramp last quarter, so you're probably projecting another, 1.8 million, something like that in Q4. The average analyst consensus projects 12.63 million in revenue for fiscal 2026, representing significant growth from the estimated 3.2 million in 2025. There's a high estimate here of 19.27 million and a low estimate of 6 million for revenue next year. Again, this is an AI real estate company. The real estate market is massive. There's 4 million homes per month that sell in America. Capturing a baby fraction of that would be massive for Realpha. And that's the reason I like the company to begin with and why I bought a position, because I felt like a company like Realpha that has a win-win proposition, right? It might be easier for you to deal with Realpha to get a mortgage, but beyond that, you're going to get paid for going with Realpha. You know, people respond with what benefits them, right? So Realpha actually paying you part of the buyer agent commission and giving you this money back is an obvious no-brainer. Now, I also believe the real estate market will pick up next year, and that's part of why I initially bought a position. But again, the stock's about a 60 million market cap divided by 12.63 in projected revenue next year. The company's trading at about 4.75 times sales. That is really low. Okay. Most AI companies are typically trading around 20 times sales, 15 to 20 times sales. So 15 times sales could put the stock 3 times higher than where it is today. It could put the stock at, instead of 78 cents, it could really justifiably put the stock at $2.34. Okay. But there's one big issue and one big reason why I've not talked about this company until now. It's the cash. Okay. They only have $587,000 in cash. So unless they get some kind of, private placement or do some kind of dilution, there's this problem, right? And from my opinion, I thought it was worthy of a small position, but I had the understanding that they're going to dilute people. I didn't want to talk about the stock too prematurely, and then boom, you get dilution. So that's the risk, at least in the short term with this stock. If the stock does go to like $2 a share, the company's going to raise capital, right? But I think it is a good sign when you have so much insider ownership. They are aligned with you. So unless you start to see insiders that dump out of their positions, they are doing what's best for the company, number one, but people are going to do what's best for them at the end of the day. And these insiders that own this one guy alone that owns 30% of the company, he's not going to want to dilute shareholders and dilute himself if he doesn't think it's worth it. So that was kind of my longer term projection on the company, that it's actually, trading a lot lower than other AI companies. But the big problem is they don't have a lot of cash and they will need to do a dilution round or something at some point. Now, as far as a trade is concerned on this one, I think a trade, the sky's kind of the limit, right? When you have a stock like this. Now, just recently, back in September, on September 12th, the stock was as high as $145 and some change. Robinhood might not be the best way to look at that. But yeah, the stock more recently, was like $1.80 at the high back here on September 12th. Before then, it was in the $1.50, $1.80 range in early 2025. It hit a high of $4.49 on December 26th, 2024. It went up 161% in a single day. And then prior to that, the stock used to be a lot higher, right? You're going to see these numbers where the stock was like $500 a share. Let's actually look at this from a market cap perspective. That is one reason I really like Public, okay? There is a link down below in the description of this video if you want to come join Public, where they have a lot of cool features, and I'm about to show you one. But if you use that link, sign up, deposit $1,000, you will get $100 in your choice of free stock. You could buy this stock with it. You could buy a different company with it. Doesn't matter. But this is one thing that I really love about public, right? They show you the market cap. Okay, so the market cap back on September 11th was around $101 million. Again, it's about $65 million today. Back in December of 2024, when the stock was $4 plus a share, the market cap was about $164 $164 million. So roughly comparable, apples to apples. That would be like the stock hitting about $2.30, because there has been some dilution between now and then. But back in the day when it first listed, it looks like the market cap was about $17.3 billion. I would have to do a little bit more digging to see if this company went public via a SPAC or something. Even November 13th, 2023, the market cap was like $500 million, right? 2023, the stock was like $10, $11 a share. Okay. So I'd have to do a little bit more digging what happened there, if they actually IPO'd or what exactly happened, why it looks like the stock was $500 a share. But from a market cap perspective, again, you have seen higher market caps relatively recently compared to where it is today. So I do think there's quite a bit of room for the stock to run from a trade perspective. But again, the main concern would be dilution. If this company can raise cash without dilution somehow, right? A loan with favorable terms or something, yeah, the stock could go significantly higher. And especially as rates come down, if the real estate stocks start to do a little bit better, I mean, this is a real estate company with hyper growth that is an AI, real estate company that's trading at a very attractive 4.75 times next year's projected sales. That just grew 1,900% in the last quarter. So, for a risk reward kind of trade, I liked it. Okay. That's why I bought my position in this company. I bought 6,000 shares at 56 cents a piece. My portfolio diversity, I only have 2.91% of my portfolio in this stock. Like, if it falls 50%, I will lose about 1.5% of my entire portfolio value. That to me is not a lot. Okay. If the stock goes up 10x, I'm going to make like 30 grand. And this is going to equal 30% of roughly this portfolio value, right? I like the risk reward on that. Okay. Could this be an OpenDoor part 2? It potentially could be, but you have the concern of dilution. When does the company dilute? I do not know. So I actually bought my position on October 7th. Okay. At 10:41 a.m. Okay. And I bought more at 12:11 p.m. as I did a little bit more research. I started a starter position with 1,000 shares, and then I started looking into this, and I said, oh, wait, I actually kind of like the company. I just don't like the cash position. So then I bought a larger position. All in all, put about $3,300 or so into the stock. And again, you got to treat this one like it could go to $10 a share or go to zero. Right? You need to be prepared for either one of those things to happen. So with that said, ladies and gentlemen, let me know your thoughts on this down below in the comment section. Again, to reiterate, this is not something you put a large chunk of your portfolio in. This is a micro cap company. This is nowhere near a guaranteed return result like this, this is high risk, high reward kind of stuff. But I do like the risk reward, even at 82 cents a share. But yeah, so have a great rest of your day. Let me know your thoughts on this down below in the comment section. You guys, I will see you in the next one.